Tuesday, May 27th, and I've got a lot to go over today. We're going to go over a lot of AI. It's a big earnings week with NVIDIA earnings coming up. I will go over that. We'll go over the Catalyst Watch email, which turned out to be a great email last week, which pointed to several 50% and plus stocks that made that move. We'll talk about the market. We'll talk about Trump's tweet. We'll talk about the contrarian trade with bonds. We will talk about, I will give you a few bullish bull flags in technical settings. We'll talk about some fundamentals. We will talk about new AI assistant. We will talk about it all. Right now, the futures are way up. Okay. 1.45% on a QQQ. On VOO, you're up 1.31%. We did break the confirmation of the 9-day EMA right there on the 4-hour. Broke the confirmation. The MACD was trending down. Trump tweeted out, we are all good. All systems go. Rinse, repeat, whatever you want to do. I did write a bonus podcast over the weekend. Okay, what if I lost everything today and had to start over? That is one of the things that I did in January, was a 5-week course to train yourself in the market like I have. Okay, it doesn't take a long time to train yourself. You've got to do the work. But what if I personally lost everything, including my memory? What would I go through? Technical and fundamentals. This particular one on Saturday was the fundamental portion. What are the fundamentals that I use when I evaluate a stock? How can I tell that one stock is better than another? How do I decide, okay, if I've got 3 stocks that I want to invest in, what are the fundamentals that I will look at in each one of those stocks to determine, is this a good opportunity or not? So if you have any questions on fundamentals, look at that one. You can just go over to Daily Stock Pick Newsletter. If you don't know the link tree is literally right next to my head. It is right down here, and you will get it right here. The newsletter is free during the week. So 100% free. This is a weekend one. It's a bonus one. Okay? You want to know what else I did over the weekend? I met a new friend named Hank. I'm sorry, this is Frank. Not Hank. Frank and I went hiking in FDR Park near Columbus, Georgia on Sunday. Frank enjoyed the mud, the streams, gave me a wet hug afterwards, and rode in the back seat on my shoulder. It was a good day. It was a good weekend. That's my new friend, Frank. So I did get an email from over the weekend, too, from a listener named Bob. He said, Gary, did you know Seeking Alpha has amazing chart abilities? You may not talk about it because you use TrendSpider, but I just thought it was important to tell people that, hey, you can use Seeking Alpha for technical portion and actual trading. Yes, I did know that. I use their comparison charts. You guys see me use this to compare one PE to another, to compare this and that, blah, blah, blah. I don't use their actual technical charts a lot because I have TrendSpider. When people start bashing me about selling too much, the reason I don't go into TrendSpider, every portion of TrendSpider's abilities and the things that you can take advantage of, is because I'm not selling. I'm simply showing you what I use. So if you like Seeking Alpha, if you want to do it and you want to try it, go over to Linktree. Okay. The second link is a bundle. That's a bundle which comes with Alpha Picks. But this third link, if you want to see what it's all about, the third link is for Seeking Alpha Premium. Okay, try Premium for 7 days and get $30 off. Here is a video hub. I will include this in the newsletter for all the subscribers. You can see all the tools that you can use. It's a video hub. How you use Seeking Alpha Premium for your benefit. And again, you get a free 7-day trial. So there's no reason not to try it. So Bob, I appreciate you writing me. I'm simply telling the features as they are, as I use them. You're an individual. You may use more than I do. It's information. And again, I expect you to go out and do your own work, create your own system. I'm simply telling you what I do in order to manage my own portfolio. Okay. And one of the things that I do every week is read the Catalyst Watch. We did this last week. This email identified Advanced Auto Parts, which was up, 40%? Fannie Mae, which was up close to 50%. WRD, which was up 20%. Urban Outfitters, URBN, and others, many up 50% last week. So get yourself ready for this week. Read this every Friday from Seeking Alpha. And again, when you get Seeking Alpha Premium, that's what comes with it. Okay, notable companies to report on Tuesday. AZO, AutoZone. We saw Advanced Auto Parts last week. Does that one come in play? We have an Alpha Pick, Okta. And if you don't know what Alpha Picks is, Alpha Picks is a data-driven portfolio, 2 stocks every month, one on the 1st and one on the 15th. We're going to get one on the 1st. The alerts come when to sell. The stocks cover multiple sectors. You get access to all of the portfolio. On day one, you can save $50 if you sign up on the 4th link on Linktree. It says Alpha Picks. It beats the S&P. The 162%. During the same time period, the S&P was up 57%. It is a long-term portfolio. This is not something that gets you in and out, in and out, in and out. Okay? The best deal is the second link on Linktree. Okay, this second link right here, Seeking Alpha Premium and Alpha Picks. You get all the premium stuff that I just talked about, but you also get Alpha Picks and you save over $150. I have both. I was a paying customer of both before I became an affiliate. Okay, but this Catalyst Watch is amazing. Okta is an Alpha Pick portfolio stock. Okay, Box is not. All day, you've got MicroStrategy CEO Michael Saylor talking on today, and Robinhood at the three-day Bitcoin conference. That's going to be pretty. You got Penn Entertainment, Oklo, and DraftKings are some of the notable companies that present at the Institutional Investors Conference. Then Wednesday, you've got Salesforce, you've got Nvidia, you've got Dick's Sporting Goods, which I was just in this weekend looking for golf shoes, Pure Storage, Elf. We'll go over later all of the earnings. But you've got a lot. And what it points out here is there's volatility watch, and that's where you find the ones that may move the most. Okay, that's where Advanced Auto Parts was last week based on a short squeeze and earnings. That's where FNMA was. That's where all of that stuff was. Okay, so watch it. We'll go into earnings later. I just love that email that comes out. Now let's talk about what happened over the weekend. Friday, Trump said, "Hey, the EU, we're going to put huge tariffs on you on June 1st." And then the EU comes back and says, "Hey, we need time." And Trump says, "Okay, it's going to be July 9th. Futures soared." Okay, it's rinse and repeat at this point. We're going to hear about tariffs. We're going to see the market overreact. Any reaction is an overreaction. Then shortly after, we see the tariffs put on hold. The play is always clearly spelled out by the dip until it isn't. And I expect that to be around late June, early July, when all of these extensions come into play. Okay, we got the one beautiful bill going on right now. But these retreats, this is UBS chief economist Paul Donovan. These retreats are so frequent that investors should rationally expect them. First, even if no one thinks the threats will be carried out, firms will need to put in some insurance. So the big money is betting on what he actually says he's going to do. Second, wild swings in the policy making increases risk in the markets, and a general sense of unpredictability requires a risk premium. In addition, investors perceive two factions on trade policy: the conventional and the more radical. Aggressive tariff policies suggest the radical faction is dominating Trump, and markets favor the conventional over the unpredictable. Third, the aggressive tax increases are sensational and attract media attention. The retreats are rather more mundane. This may help consumers' perception of policy if the potential damage of tariffs is remembered and Trump's retreats are forgotten. Again, if we actually get the tariffs, you're going to see a lot of damage done. So just expect that. How to set yourself up? Maybe you want this. Maybe it's time for the ultimate contrarian trade. And I didn't know what this meant. This is all bond talk. I am not a bond expert. As much as everybody thinks I'm a bond expert, I am not. I am a dummy. Maybe you read this article like I didn't and confused. What is it telling me to do? I had no idea. So I uploaded the actual text of this article to Perplexity. And I said, what does this all mean? Okay, I'm going to include the actual explanation. I'm going to read it to you now, but I'll include it in the newsletter. Right now, the yield interest rate on a 30-year U.S. government bond is 5%, which is high compared to recent years. This isn't my opinion. This is Perplexity. The strategist from Bank of America Securities, which is in the article, is saying that since so many people have sold these long-term bonds and pushed yields up, it might actually be a good time to buy them. That's because if you buy a 30-year bond now, you lock in the high yield for a long time. So you get paid more interest every year for the next 30 years. Again, it's locked in at 5%. But if you've got $1 million, what's 5% of $1 million? 50,000? You're going to lock in $50,000 a year in payments from a U.S. Treasury, which has some tax savings. You're going to lock it in. He's calling this a contrarian move because meaning it goes against what most people are doing right now. Most investors are scared of long-term bonds because their prices have dropped. But that's exactly why the yield is so high and why it could be a good opportunity if you're willing to hold for the long term. Remember, and this is what I know about bonds. As more people start buying, the actual rates come down. As more people are selling, the rates go up. They have to attract buyers. So yes, he's basically saying with the 30-year bonds above 5%, it could be smart to buy them now if you want steady income and believe yields won't go much higher from here. But remember, if rates keep rising, bond prices fall. So if you lock in at 5%, and all of a sudden the 30-year goes to 6%, your bond is actually worth less. Yes, you've locked in 5% for the next, 30 years, whatever term you buy, but your actual bond is worth less. So that's why he's saying it's actually a contrarian trade, because a lot of people think that the rates may go higher. Again, if Powell doesn't pull the rates down and Trump keeps pushing this and we actually have to raise rates because inflation comes back into the market, that will push prices up. Okay? And volume is what drives prices. Here's a scan from TrendSpider to find high volume stocks. Okay, what does it do? This is rising RP scan, bear days. Okay, this identifies everything that you need. Highest volume stocks right here. You can import it. Okay, and say you get bad days and you want to import this rising RP scan, bear days. Again, this identifies stocks with strong relative performance by filtering for names with relative performance greater than 85 and increasing relative performance and relative volume over the last few sessions. It's a very simple scan, and you can import it into your system. It's based on a 30-minute chart. By focusing on stocks that are outperforming their peers and seeing rising participation, this scan helps you find stocks. Again, it's TrendSpider. So it's importing it into your system. Go and do the scan. I'm not going to bring it up for you. You can bring these up if you want. Sorry about that. I had to break for a dog emergency, but yeah, you can import that. Now, where do you get TrendSpider if you don't have it? Right here, Linktree, top link, right there. They are having a phenomenal sale. Okay, $50 a month. 56. I would urge you to get the premium because you're getting it for about the same price as the standard. It's like $5 more a month. That's nothing. And the premium comes with a lot more, including, scroll down. And if you get a 2-week trial, by the way, they do have 2-week trials during this. So go and check out the different yearly, quarterly, and 2-week trial plans. Because if you get a 2-week trial, you can take a training from a product expert to teach you how to use TrendSpider. Again, it's like $7 and you can get a training in that 2 weeks to teach you how to do it. If you sign up for the yearly plan, okay, an annual plan, just go over here to the email address, the email right here on Linktree, and email me. And I'll get you my 4-hour algorithm, everything that's included. We're going to go over a little bit more on the charts, but you'll get everything. Okay? And get the capitulation detector. Fire's bearish. It's not a short everything signal, just a cue to tighten your risk and be cautious. And it triggered on Friday. Build and backtest your own strategy. This is the capitulation detector. So it can tell you, hey, this is bearish capitulation. Did you want to do it back in December? It didn't trigger a bullish capitulation. It did here. And it got a nice bounce up in March. Didn't trigger bearish, but the bullish down there, it triggers. Again, it highlights extreme overbought and oversold conditions. You can do it on QQQ like they did, or you can do it on individual stocks. Import it into your system. And SPY, institutional supply, right on Q, right there, the demand zone. See how the volume indicators go up? This custom indicator auto maps zones. Okay, it puts the supply zone in there where big money has historically made moves. No guesswork, just clean. Again, all of this is meant to give you an advantage. It's meant to help you sleep at night. I use this to manage my portfolio. And I'm pretty confident at this point that we've got a bull market because there are bull flags all around. Am I going balls deep at this point? No, because we can be taken down by a tweet. I've gone over the valuation before. You can go back and listen to a bunch of podcasts. I think we're range bound in the S&P between 5,000 and 6,000. Where are you right now? Let's look at a chart of SPY. Okay, on the 4-hour, this one's up what? 1.33% at 586. If the S&P is between 5,000 and 6,000, SPY will be between 500 and 600. It's very simple. Now, my 4-hour algorithm makes you 38% over the last 24 months. 19 positions. You're not even trading once a month. It got you into here 540. I said it was a good buy. I thought it was. And it still is. But you've turned over a little bit. Now, we're seeing this big move on Monday based on a tweet that EU tariffs are being, again, you're pushing up towards that 6,000 level. And do you want to load in at that 6,000 level? I would argue no. Individual stocks, totally different. There are catalysts for different total stocks. But again, when you're up at this area, I don't want to buy. And I'll wait to trim on days like today. I'm selling, VOO. If I bought SPY in 2005, I'm trimming on a day like today. I'm going to sell the stocks that I bought in 2005 for long-term capital gains. And I'm saying, you know what? I may be able to buy it lower here, and I'll just pay the tax, or if I'm in a tax advantage plan. That's the way I do things. I sell long-term stocks. I don't sell short-term. So in these indexes, I sell them long-term. And again, you've got bull flags on many, many individual stocks. Nvidia, Amazon, Tesla, Oracle, JP Morgan, Cisco. Lockheed Martin. You can use TrendSpider, members of Congress, to highlight members. Look, they're loading into Lockheed Martin. What do they know? Let's go and find a strategy on Lockheed Martin, LMT. This is a defense contractor. It's not my thing. Full disclosure, I am not going into Lockheed Martin. But the 4-hour algorithm got you in back here on May 20th. Are we going up? Maybe there's something that's being noted or being bought. Maybe it's the Golden Dome stuff. Who knows? But Lockheed Martin, they're loading in. This guy bought up here at 550. He was in some meeting. You know that. They have insider information, and they're loading into Lockheed Martin. Again, not my thing. Just bringing you the information. Confluence is everything. Okay? Confluence is everything. The RSI and MACD confluence indicator fires green when the RSI is over 50 and the MACD signals stacking momentum. This on Tesla outperforms. It outperforms on Tesla. So again, you can import this strategy. The one that I like on Tesla is my 4-hour algorithm. And this one got you in at 255. You're trading at 347 right now. Okay? Solid gain. Solid gain. The 4-hour algorithm is a solid gain on Tesla. I like it. Now let's talk about individual stocks. Because 12 value stocks, Visa, American Express, Eli Lilly, Nike, these are from Morgan Stanley. Amazon's their number one. Let's take a look. If you saw this and you said, hey, I want to take a look at Amazon, how would you do it? Well, first thing I'd do is I'd go over to Seeking Alpha. I have Seeking Alpha Premium. I would go, okay, I'm going to take 2 seconds and I'm going to look at the quant. The quant says strong buy. Okay, if you don't know what the quant rating is, it's based on valuation. You get grades, valuation, growth, profitability, momentum, revisions. It's all there. It's nice and easy to see. You don't need to do 50 hours of research. They've done it for you. So then you pull up the quant and you say, oh, how long has it been a strong buy? Well, it moved to a strong buy at 204 here on the 20th of May. Okay, at 206 on the 19th. You can see it listed down here. Has anything changed since then? No. I mean, let's see, the revisions have gone down a little bit. And that's a C+. But let's dig in, okay? This is the way I do things. I will show you an even easier way in 1 second. But the valuation, you're paying 32 times forward earnings. Is that bad? It's high because the sector's paying at 15. Okay? But traditionally, this has been closer to 40. So it's not crazy. When you factor in growth and you look at the PEG, okay? The PEG is 0.45. So the valuation's a little bit stretched. It's a D. Your growth, when you factor that in, fan-freaking-tastic. Okay? 10% revenue growth year over year. The sector's growing at 2%. When you look at profitability, they have a 49% profit margin. Great. Momentum, this is probably the most important because it's just price. Over the last 3 months, it's down 7%. The sector's down 8%, which means they have relative performance because they're performing better. 6 months, they're up 1%. The sector's down 11%. 9 months, they're up 13%. The sector's down 10%. 1 year, they're up 11%. The sector's down 10%. They are outperforming the broadline retail. Now, the even easier way to look at this is just to pull up Analyze with AI. Okay, you can read the company description, the competitors, Walmart, Microsoft, and Alibaba. You can go into the sector. Here's the quant. It explains the valuation. An expensive valuation. We saw that price to sales ratio of 3.25 compared to the sector of 0.88. They are expensive. However, the PEG ratio of 0.45 suggests some underpricing compared to the sector. Again, I go over all of this in the paid newsletter because I like PEG and I like PE. Growth metrics. Earnings per share growth year over year at 72%, outperforming the sector's 1%. Revenue growth, which is my favorite, is 10%, much higher than the sector's 2%. So even if you didn't know about Amazon, you could go in there and look at this. Amazon's profitability, net income margin of 10%, considerably higher. The cash from operations is notably strong. Momentum, they go over just what I said. Revisions, there have been numerous downward revisions in both earnings per share estimates and revenue over the last 3 months, with 42 downward revisions, each indicating some analyst concerns about future earnings. Yes, you're paying a high price and analysts are bringing it down. But have they brought down their actual stock price? No. This is considered a $238 stock from Wall Street. It was $265 just in March, and they brought it down a little bit. What has the stock done since they brought it down? It's come up to meet it. They're going to start bringing this back up. The monkeys on Wall Street. So when you see something like this, the 12 value stocks, go and look at it yourself. Then, if you want TrendSpider, okay? And you say, well, maybe I want to trade this on a chart. Well, the 4-hour algorithm, while it doesn't beat buy and hold, its winnings, okay? You look down in the bottom right, you win 54% of the time. So over 24 months, there are 24 positions. That means you win 13 times and you lose 11. Your average win, 5.97%. But instead, I would use this as an entry in this stock. I believe in this stock long term. I do think that 188, which was the 2021 high, is a support level. It's been resistance. This one could take off from this point. I said anything below this one is an absolute buy. I love it. So again, when you see something like this, that's the process that I go through. Now, maybe you want growth stocks. Here is Shai Bulor's top 15 growth performers in 2025. And look at these. Melly, which I've written about before, up 47%. Carvana up 50%. C Limited up 55%. Okta, which is an alpha pick, is up 57%. Duolingo up 60%. Palantir. He gives you all of his growth portfolio. Okay, Oklo is up 130%. Hims is up 127%. Huge, huge gains. And now you know how to go through and evaluate those companies. So go and do it. Maybe you want highest quality growth stocks. Taiwan Semi, Novo Nordisk, AMD. These are all supposedly undervalued. And how did he go through and undervalue them? Well, he just looked at the quality rating from ValueSense. And you can go and do that in Seeking Alpha as well. You can go and evaluate. Are these actually undervalued stocks? So go and do the research yourself. Maybe you want 10 emerging market stocks. Here Steve Kress from Seeking Alpha outlines, and he gives you the full description of which markets are doing better, and then he gives you the full reason why he would say that these stocks are good using Seeking Alpha. Again, 10 stocks in emerging markets. You can go and look at them yourself, and you can go and research them. It's very simple. Now, Dumb Money is a podcast that I listen to. The next $10 trillion companies. Let me turn down the volume here. It's AI. I mean, is there going to be a $10 trillion company? I talk about it all the time. If you want to see the market cap of companies, you can come over here, you can go to the screener, and we can just sort it by market cap. We're just going to go and we're going to do S&P 500 right here. Your top market caps, Microsoft, Nvidia, and Apple, and Amazon, and Google, and Meta, and Tesla, and Berkshire. That's the top. And when they talk about it, they're $3 trillion ones. Okay, that's the top. They're saying, hey, AI and robotics could bring us to a $10 trillion market cap company. That would mean those largest companies like Nvidia would triple from here. And that's crazy. Tesla would triple from, would 10 times from here because they're only a $1 trillion company. So does market cap matter? I think it does. Now, I will tell you, Tesla is absolutely desperate. I'm not going to include the news story, but they went down 50% year over year. I think it's actual like 48, but when you round it, it's 50. 50% year over year on their deliveries from Europe. Okay, that's just known because of the registrations. It's not an official Tesla thing. It's just the registrations. But anyone in the U.S. can now schedule a 48-hour test drive directly from the app in the new Model Y and Model 3. This is my referral. Go and schedule a test drive. I will tell you, go and schedule a test drive. And the reason I tell you that, someone I follow on Twitter, Amit, went from New Jersey to Boston this weekend and back. He did it for a Twitter meetup. He didn't have any interventions, okay? Anybody that's driven the George Washington Bridge or the Verrazano or any of those bridges or tunnels in New York, it drove them perfectly. It's getting that good. It drives me every day back from running at the high school track that I'm on. It drives like a 30-year-old driver, maybe a 40-year-old driver. So it hasn't driven that well at times. It's still like in its 20s. I would say it's in its 20s. But, 3 months ago, it was in its teens. That's how fast this stuff is going. So remember, Tesla is not a car company. You see how desperate they are, how their sales are down. And then what happens to the stock this morning? It's up 2% in pre-market. You want to know why? Because Elon said he's going to focus on Tesla this weekend. Okay? The robotaxi launch in Texas happening in June. I believe it's going to happen in June. I believe in this company. AI is outpacing every other product. So again, use my referral link and you can use it right here. Go down here, okay? And you can see get a Tesla. Use my referral link right there. I got to update the wording because they change the offer all the time. But I got to update that wording. Go and schedule a test drive. Go and use full self-driving. Then go buy the stock. That's it. I mean, that's as simple as you can get. We have never experienced something like this. This is AI. AI is outpacing every other product launched ever. Okay? There is now AI that's being used to call customer service. I think it's called Pine or something. I retweeted it. I didn't put a link down to it. But they're using it to cancel sneaky gym memberships. They will have a conversation. They'll dispute an unfair charge. They'll ask for a refund, change your flight, return broken products, argue with internet providers over price, haggle with utility bills, file insurance claims, cancel sketchy subscriptions, complain to customer service. You can use it for all of that. We are in the era of personal assistance. And I've said this before. I was in Columbus, Ohio last year, and I was using Google Maps. And I don't know how I got to it, but I got on some type of trial where it told me that a Google Assistant can call the restaurant that I was going to drive to because there was an expectation that there was a wait for tables. It was a mom and pop sushi restaurant. I didn't know it. They called. These people thought I was the king of like Sunai. I don't know what I was treated when I got in there because my personal assistant had called. The conversation was that good. And that was last summer. Imagine what it is now. It's huge. The stuff you've been putting off for weeks, the AI can now do it in minutes. So I'm not going to teach you how to do this stuff. That's not what this is about. But understand there are opportunities in this market. Nvidia is one. Their earnings are coming up. Another one that you might want to look into, NBIS. Uber is using them. And this is a whole video. Uber is scaling autonomous food delivery, partnering with Nebius AV Ride. See those little robots? They're here in Atlanta. They're here in Atlanta, and they deliver your food on the sidewalk. It's huge, and that's NBIS. Okay, where's NBIS stock? It's down, not like dead, but it's at 39. Where's this gap leading you to? 78. Now, if you look at a weekly chart, again, how are you reading your charts? We're under the 200 day. Do we get back above the 200 day? Because that's 47. Let's look at the valuation of this thing because it is overvalued. You are going to pay for the hype. Okay, it's a strong buy from Wall Street. There are 3 analysts that cover this. 3. Take that with a grain of salt because their price target is $52. So take it with a grain of salt. When you look at the valuation, everything looks bad. The quant has it as a hold. The only thing that's good is momentum. Look at that stock price performance. I said it many times this weekend on the bonus podcast. The only thing that matters in a stock is the price. You can go out there and do every piece of research that you want. United Health looks fantastic. Their CEO got shot, murdered back in December. Now we're under investigation from the Department of Justice on unfair billing. The fundamentals sometimes don't matter. It's just the price. And look at Nebius. And again, if you want to analyze it with AI, you can. Who's their competitors? It's Amazon, it's Microsoft, it's Google. This is a company that could absolutely explode. And when you go and look at their financials, they're making $161 million trailing 12 months in the revenues. But their actual market cap is $9 billion. They have a little bit of short interest. So go and read the AI on that one. This is one that I like. I've got it on my watch list. I'm trying to figure out a way in on this one, but I like the actual stock. Now, earnings this week, it's the big one. It's Nvidia. I mean, you've got a ton of them. A ton of them. This particular article goes over what to expect. You know, we got Costco on Thursday. You got Canopy Growth for all you potheads out there. I just got off of a trip of Denver. I was high the entire time off of edibles. I won't smoke, but I love edibles. What matters with Nvidia this week? Let's look at Nvidia, because this is the king. They're expected 93 cents per share. What did they report last time? 89 cents. That's a gain. Little bit aggressive, because this is a $3 trillion market cap company, $43 billion in revenue. Could go down to 39. Remember, they took a $5 billion or $50 billion hit off of China. What matters? It's possible they beat and raise their guidance. It's going to be about Blackwell production, which is rumored to be delayed, and China sales. They've also said, hey, Trump may reverse this stuff and we may be able to sell into China after taking a loss. All of this stuff is going to basically guide the market as to, is Nvidia still as hot as they have been? Look at the revenue per quarter. That is an enormous stock that you want to invest in. Is it too expensive? Not really. I mean, it's expensive, but it's not too expensive. You look at the valuation, it's an F, everything else. The quant hates this thing. But here's one of the things that you can do with Seeking Alpha, and this is what I like to do, because PE is one of my favorites, and we're going to get rid of the S&P 500. We're going to go over to metrics, and we're going to go to valuation, and I'm going to put in PE right here. Okay, I don't care about price return. I want to put in PE, and then I want to go 3 years. Okay. It's not expensive. You're actually paying less for it than you did in July 2023. You're paying less. You're paying less for it than you did back in 2021. That's 50%, by the way. It's at 50. This is the price to earnings. You're paying 50 times the price to earnings. Back here in 2021, you were paying 100 times forward their earnings. So it's actually cheaper. Could Nvidia deliver a monster guidance on its Wednesday earnings report? Seems possible. That's Oppenheimer's Rick Schaefer. Company's likely to top estimates for the first quarter, but its guidance will likely be roughly in line. Despite the loss of the H20 chip in China, production of flagship GB200 rack scale systems appears to be moving faster. With their growing pains, we believe Blackwell volume still on track to exceed 40K this year. We see GB300 on track for seamless Q3 debut. Top 5 hyperscale customers make up 50% of their sales, and they continue to diversify their top line. So again, I'm a big believer in this company, but the market, everybody owns this one. Okay, if you don't own it, you own it through an ETF. And so you're going to see this one move back and forth. You're at close to the top of the 52-week range. What does this is one of the most covered stocks on Wall Street. 62 analysts. Their average price target is 163. That's a 25% upside. In my mind, the risk reward is perfectly fine. And that's why I own a lot of this. So again, Nvidia, it's coming up this week. This will move the markets. You've got a ton of other ones. This is what I love about Seeking Alpha too. Stocks I follow. You've got ELF. This is one of the big winners from the last year that just shot up there. I mean, look at that weekly chart. The weekly chart goes all the way up to 203. Where are you trading right now? $85. That's a big one. I like that one. Volatility, it works. It works to trade it. Find a strategy where you can trade it. Nvidia coming up, Costco, part of the core portfolio, which has outperformed the S&P. Costco at $1,000. Do I want to buy it? It's expensive. But understand, this is based on membership. And who's canceling their membership to Costco? I'm not. So do I want to buy it at $1,000? I don't. I sold at $850. I'm waiting for it to get back to $850. It's been a long time. Did I buy back here where it got to $888? No. $850 is what I want. And so I'm willing to wait. I do own this one. Remember, when you buy QQQ, you own Costco. Dell, which was taken out of the core portfolio. This one is reporting on 5/29. Nvidia is reporting on 5/28. You should be able to benefit if Nvidia just blows it away. Expect Dell to start soaring as well, and expect SMCI and some of those other suppliers. Again, it's going to take the market up. Now, if they say we can't make enough Blackwell, we don't have enough, cooling, VRT is the cooling system. Maybe something happens. But again, you've got to, the Seeking Alpha top 2025 stocks, which is outperforming. This is one that's negative. It's Credo. And it's trading at 61. Boy, don't you wish you bought here at 40? This is a semiconductor company. The rumor is this is Amazon's semiconductor company. So go and find some stocks, go and value them. Again, if you don't know how to value them, go over here and you can go to Daily Stock Pick newsletter. And what if I lost everything? Mastering technical and fundamental trading. This is fundamentals. That's how to value a stock. And Earnings Hub, great one. And while we're in this bull market and I talk about volatility, one of the other things that I tell people is it's good to have a good portfolio, your large portfolio, but have a small YOLO portfolio as well. And don't do it in the same place. So you can join Webull or Robinhood using these links. You get free stocks when you join. Okay, I have Webull. Why? Because they gave me a ton of stocks. And I turned, I put $1,000 in there, and let's just go and look. It was $1,000. And right now, it needs my Face ID, 12,300. It's a YOLO portfolio. It is not something that I would ever trade in my regular portfolio that way. But it's a good thing to have. I replaced my sports betting account with basically that. So if you have any questions, hit me up. Again, that's the whole process. It's not hard. It's very simple. I don't spend all day looking at charts because I set alerts in TrendSpider. I know exactly what I want to buy. I have a watch list and I set alerts. And even here in Seeking Alpha, you can set alerts right there. You can set a price alert. You can set a quant alert. You can set a bunch of things. So Seeking Alpha is a total platform. If you don't want to get into, technical stuff, don't buy TrendSpider. You buy TrendSpider because you want to technically trade. I do both of them. I need the technicals in order to support me buying in, not at a 52-week high, not at an all-time high, not when it's all-time stretched. And I need the fundamentals to support me to know that I'm actually buying at a discount. I don't want to go out and buy a car at sticker price, when they just had a 25% tariff. That's as simple as it is. It's as simple as that. So if you have any questions, hit me up. I will talk to you tomorrow. See you. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.